Joining us now is Paul Keary. He is CEO of Teneo, which surveyed more than 300 public company CEOs and institutional investors about 2023. He's here with us in our New York studio. Paul, great to see you. As we look ahead to 2023, and as Scarlett alluded to, the conversation really is about recession risk. What did the survey indicate about how corporate America and institutional investors are really feeling about that probability in the year to come?
Well, nice to see you both, and thanks for having me. You know, the headlines for me from the survey were, the majority of CEOs, when they think about the first half of next year, have significant concerns. And not surprising, perhaps, considered a post-COVID world, dealing with the geopolitical tumult of this year, the economic contraction already experienced, and then looking at deglobalization for next year. Investors, interestingly, had a very different view. Perhaps the bad news they feel is priced in, and they feel that the Fed will make the necessary steps to manage inflation, ergo avoid triggering a recession. And I think investors view that equities are pretty reasonably priced right now if you look at the 5-year average on a PE ratio basis. But it's interesting that that delta exists, and I think CEOs have a lot more to contend with perhaps than investors. And we spend a lot of time with CEOs around the world, and that big issue of deglobalization, I think, is going to be the rallying cry for issues next year.
The deglobalization trend, it's been a huge debate this year. It also has led to a lot of inflationary forces as well. How do CEOs prepare for further deglobalization, and is there any way they think it might play out into the coming year that we haven't seen really come to manifest this year?
Well, it's interesting, 2 points. One is it's an issue that investors and CEOs were aligned. Deglobalization is real, it's a reality, it has import. Little difference, however, is that investors want more action from CEOs on diversifying their supply chain and diversifying their source of funding. And I think the expectation is that next year will be the deglobalization year as companies rethink supply chains, go on opportunistic M&A, rethink funding sources, but there will be a contraction perhaps to their total aspirant market, because the big issue obviously in a deglobalized world is the US-China relationship.
Absolutely, and that continues to come to the forefront time and again. As we think about just the macroeconomic picture as a whole, whether it be inflation impetus from deglobalization or just slowing growth because of central banks trying to fight inflation, as you said, CEOs have to make decisions with that economic environment in mind. What are they doing with people and their employment force?
One of the interesting outcomes from the report was on the point of talent. And investors had a definitive view that they expect to see more digitally native, AI native, metaverse native people in the executive suite in companies. Okay. The expectation is also that companies will invest more in those emerging technologies. And that's the Goldilocks challenge that CEOs have. Not being penalized for being overexposed to disruptive technologies, but not being seen to be left behind. But increasingly, investors want to see companies understand and benefit from some of these disruptive technologies.
What other pressures do CEOs face? If you think about the year behind us, there were forces that we didn't see coming into this year, particularly the war in Ukraine. But are there other forces going into next year that'll force CEOs to move, whether it's stakeholder activism, whether it's the fight against stakeholder activism, or whether it is a new technological force that will force more innovative changes, you're saying?
Yeah, I think on matters pertaining to ESG, CEOs have a view that at least 25% are concerned that they don't have the appropriate response or mechanism to respond to the next ESG concern. As a consequence of that, I think one of the things that's fascinating is from an ESG perspective, working with CEOs around the world, and you interview many every day, I haven't met a man or a woman in that chair who doesn't want to see the world in a better place from whence they found it. And ESG is the driver. Companies largely have been the drivers on progress on matters ESG. I think there's a hope and expectations that regulators and legislators can actually catch up to the progress that CEOs are making on ESG.
Well, it's an excellent point, Paul, that you've talked to people around the world. What are some of the key differences you've seen between the conversations you were having with US-based individuals versus those elsewhere?
US CEOs, by and large, are less bearish than their counterparts in Europe and the Middle East and APAC. perhaps as a consequence just the rude health of the economy here, and as a consequence of the US being at the forefront of new industrial policy. But I think the large delta has been the sense of confidence in this market and a sense that US companies are leading on decision-making modeling as it pertains to supply chain, diversity of balance sheet, and diversity of funding. So I think US seem to have an edge as a consequence of those issues.
It's interesting to think about the US edge as well, because I think about what Jane Fraser said over at Citigroup just a couple of weeks ago here, that the world is likely to face a rolling recession, that we don't get into a recession all at once necessarily. And if you think about the position that puts the United States in the vein of what you're saying, that M&A is possible, but deglobalization is also true. What does this mean for acquisitions, divestitures, the way that people shape their global footprint in this next very complicated, challenging era?
I think the deglobalization debate is well told. I think the boardroom debate is zeroing in on what are the consequences of the US-China relationship. And then investment decisions and divestment decisions are as a consequence of that rubric. So I think there is a realization also coming through that you may be left with a smaller consumer base as a consequence of China not participating in a deglobalized environment, which is requiring CEOs to rethink how do they capture a bigger TAM, how do they be the net winner in a consequence of consolidation or M&A, and there's a real concern as to what are the market fall-off opportunities for companies and what are the winners and losers as a consequence of the US-China breakdown, if that is the geopolitical outcome for next year.
Paul, we thank you so much for your time. That is Teneo CEO Paul Keary.